A review of Robinhood, just 21 minutes and counting before the earnings. This is live, happening in a live show. I'm using my alpha spread. If you are one of my members, you get a lifetime discount to this service, which basically gives you my membership for free. Wait to the end of the video or look below in the description of the video and I'll give you the links to how you can get alpha spread as a non-member and how you can get it as a member of my channel. But let's look at Robinhood. We've seen a slight drop on earnings. It's gone down a little bit, but still okay. I'm still in and I'm still up on my original investment, so I'm not concerned at it at all. Let's do a evaluation on Robinhood before the earnings. We can look at it again tomorrow, and because this was taken at the price at the closing bell, so it's dropped about 7% since then. So we know that these figures will be slightly better from a valuation point because the price is lower than it was when the bell went. So let's get straight into this review and then we can update it in the morning. So should we be buying on the earnings? We've got 20 minutes to go, so we've got to be quick. Subscribe and ring the bell and tap the like button as well to share this out. If you're watching me live in the live earnings, let's go. Let's go. Best case scenario, 28% undervaluation. In reality, we've got another 7% to add to that. So 35% undervaluation if you look at the best case. Best case will come by about the spring. No question about that. We're investing a lot in the UK and FX at the moment, and of course we've also got we've got interest rates high. When things start to stabilize in the spring and they start to come down, of course Robinhood make money from margin. I'm in margin right now, paying 8%. I've got no problem with that. When it comes down, however, it's going to drag more retail investors in who don't realize now is the time to buy, preparing for the bull run. But anyway, that's another issue. The base case, 24% undervaluation. Again, that was done before the earnings, so before the bell went. So we need to remind ourselves, actually, it's only about 17% overvaluation. And you might go, well, is that good? 17% overvalued? It is for this kind of stock. This is a forward growth stock. I'm happy to pay up to 25% overvaluation on a growth stock. Think of Tesla. It's been as high as 190, currently running around about 60% overvaluation. So we have to remember that a forward-thinking stock is going to be overvalued because it's a high growth stock, which it is, even though it hasn't grown yet. So I'm okay with that. Worst case scenario at $4.75. I don't value it down that low at all. And then, of course, it's overvalued by 51%, but we've got to take off about 7%. So gives you an idea of where that is. I don't think that's a good value though. Wall Street, give it a 28 upswing. Relative value down 29%. DCF down 73%. Intrinsic value down 51%, as I've just shown you. But these figures are slightly higher because it's 7% dropped after the bell, 6.8. So overall, that's relatively good. As far as I'm concerned, that's still a hold for me. Let's go on down. Valuation history. We can see the valuation. It was a nice price here, around 11.61. It's continued falling down. Remember, the intrinsic value isn't just the value of the stock. The value of the stock is what people are prepared to pay for it, not the value of the company. So I feel now it's a good time to buy it. Absolutely, I believe so. Let's look at the fundamental analysis. This is very, very important. Again, we'll review this tomorrow after the earnings and we'll get an updated figure on this. 1.7 billion, up 11%. Income is going up. Look, 1.4 billion 2022 December. March 30th, 1.5 billion. And then we got June 29th, 1.7 billion. And then we go into estimates, which is 1.9. So that's going to be a slight downturn because we know we've missed on earnings. However, we're growing. There'll be a slight adjustment here tomorrow and we can look at it. Operating income, 817 million, down 28%. Let's see where it is after earnings. Net income down 827 million, down 28%. Okay, operating cash flow 1.2 billion. Let's look at the balance sheet. The balance sheet, we like the balance sheet, very, very important. The balance sheet is 28.7 billion on assets, 21 billion on liabilities. As we can see, we are very cash positive with Robinhood. Very, very good balance sheet. That got a good side of the balance in the assets, not the liabilities. So there's no issue there with the balance sheet. 92% gross margin. That's what we want to see. Gross margin, 92%. That's what we like. That shows us there's a big moat around Robinhood. Plenty of cash, plenty of investments, doing okay. It's not going anywhere. It's not got any competition whatsoever. 92% gross margin. We like that. You can see operating margin down 67%. You can see that there quite clearly. All right. Let's have a look down here. Profitability is 24 out of 100. 24 out of 100. Positive gross profit. Let me zoom out a little bit for you. Positive gross profit, good. Positive revenue growth forecast. The growth forecast is down, but we haven't got the earnings yet. We'll see how this changes. This was done before the earnings came out, so we're going to look again tomorrow and see, and then we can compare the deal in the morning. I'm looking to buy it 5 to 10% cheaper if it goes down, but I will reassess tomorrow when I look at these figures. That's the way to buy it. No point rushing tonight. If it goes down 10%, fine. I'll double my position. If it doesn't go down 10%, down 1 or 2%, which is kind of where we are about now, I'm going to hold and wait for tomorrow and see what the profitability score is. Solvency. This is where things get very nice for Robinhood. Plenty of cash, negative net debt, not an issue. Low DE, long-term solvency, short-term solvency, 41. It's amber, turning green. It's just about to turn green. So we like that. That's not an issue. Robinhood isn't going anywhere. So there's no issue with Robinhood going bust. Looking at the Wall Street targets, this might be a readjusted after tonight's slight miss. We'll have a look. Hood earnings 159% to $25. I can see it 4 to 6xing, so I'm in that camp. The average forecast is 28% upside. If you look at it at $9, it's 6% down, which of course is slightly different because we're already at 9.11. So actually, it's only about. In fact, there's no downside to it. There's no downside to it because we're about that price now. Looking at the chart, so that's looking okay. Let's scroll down and let's see. This is always a concern, though, but we need to be clear how much. This is the insider trading. Robinhood has no buybacks, no insider trading at the moment, no insider buying at the moment. We are selling, though. The last transaction was made November the 2nd. November the 2nd by Vlad Tenev. The CEO sold $260,000 worth of shares. Absolutely nothing. No room, no need for concern. Sounds a lot. You think, oh my gosh, November the 2nd, Vlad Tenev sold shares. Well, of course, he sold shares. He's a CEO of the company. He knew that the earnings was going to be a miss. He's taken some profit and he sold. However, we need to be absolutely clear, that is an extremely small amount of shares for Vlad Tenev. If he thought the company was in trouble, he would have sold millions of shares. He has sold $260,000 of shares, which is absolutely nothing. During the last 12 months, Robinhood has insiders have not bought any shares and sold 23.4 million worth of shares. This is nothing at all. The last transaction was November the 2nd by Vlad Tenev, who sold $260,000 worth of shares. Really, that is nothing to be concerned about. I'm not at all concerned about that. We'd like to see buybacks, but we want to be in before the buybacks, all right? So that's okay. I'm not concerned about that. If we scroll down, Robinhood news. This news is a little bit out of date, so we won't cover this news just now. But we will hopefully find my reviews, because my reviews get posted below. They go here in the news next to CNBC and Wall Street. They go here. If you've seen before on Alpha Spread. My reviews get posted here, so you'll see my reviews posted here later. If we look at the sentiment over the last 90 days, things were quite green over the last 90 days, a bit of negative sentiment. Let's see how that's changed, and we'll check again in the morning. Last 30 days, it's increased. Last 7 days, it's off the scale. Today, we haven't got anything yet because it's just closed. We'll look back in the morning. So there's negative sentiment around the stock. That's why it's gone down, but we'll feed back into that tomorrow, and hopefully we'll see my review appear here tomorrow as well. All right, let's go back to the stock just now. There we go. That's what's happening right now. This is a 10 minutes before the earnings is live. This is my review before the earnings. If you join me tomorrow, we'll look at this again and revisit it. For me, I am up on the stock again now. It's not worth me buying any more at this level. I would buy more at 10% down, but I'll be looking to buy it back in the morning. So that's it from me. I hope you enjoyed that small review using Alpha Spread. If you'd like to use Alpha Spread for yourself, you can get a copy of that. I'm going to give that to you now. You can get a copy of that. And if you do get a copy of that, you can pay the full price, or you can use my referral code. Click above my head. I will give you a referral to it where you can go and get yourself a copy of Alpha Spread. But if you also click above my head and down in the description of this video, you will find my members only video, which will give you a code, and that code will give you a 10% lifetime discount. So you'll actually save money. In fact, my membership will be free. That's it from me. Thank you very much for joining me. I'll be back in the morning with an update. We are now live on the earnings. We're going to go back to it now. Hopefully you'll check out my review on Alpha Spread and here on my channel. Until then, as always, see you back in the morning. Take care of yourselves and each other.